Welcome back. Oil prices in the last couple of months saw an astonishing rally. The price for the black gold climbed 15% last year, while West Texas Intermediate light sweet crude is nearing $90 a barrel, and Europe's benchmark Brent oil is close to $100 even. NYMEX Dubai crude is currently trading at $91 a barrel. The higher these prices, the better for the GCC economies, who pump more than 20% of the world's crude oil. To discuss what an increase in oil prices means for the Arab economies, we're now joined by Kate Dourian, Middle East editor at Platts. Welcome, Kate, to the show.
Thank you.
Tell us firstly, what factors are driving the oil price at the moment?
There's a lot of factors. It's not fundamentally driven. I mean, there's no shortage of supply. It's being affected very much by the dollar's movements. It's being affected by geopolitical concerns, and obviously the cold weather in America and in Europe helped boost prices a little bit. But they're coming off a little bit. They've come off from sort of trying to get close to 100.
How much speculation is in the price at the moment?
We never really know how much, but if you look at market players and the way that they're, that they're behaving in the market, you see that there is, long positions. So people are betting on prices going higher. But I think it's sort of calmed down a little bit. For much of last year, we saw prices between 70, 80, 85. And I think the market is sort of comfortable with that. There's no reason for them to go higher at the moment.
Tell us, how large is the percentage, the GDP percentage of oil and oil-related revenues at the moment for the GCC economies? Give us a number.
It varies, but I mean, a lot of the countries in GCC rely on oil revenues for up to 90% of their export revenue. So it's quite a high number. And obviously, as prices go higher, they make more revenue. But the weakness of the dollar is actually dampening the balance of trade because, we import a lot of goods, particularly food, you mentioned earlier.
The oil price we just heard is near $100, Brent, for instance. How much does that high oil price contribute to the UAE's budget at the moment? Do we see infrastructure projects picking up?
I think we are seeing a bit of pickup. I think I was watching you this morning, and I think S&P, which is a sister company, is saying that now is the time to invest in GCC. We saw it in Saudi Arabia. We're seeing it here. I think you're seeing a pickup in projects that were on hold in 2008. But again, it was the recession. This region wasn't as affected by the global economic crisis. And then, of course, we had a recovery last year, and now prices are moving up. So you would expect to see more expenditure, yes.
So which country will benefit the most from the higher oil price in the GCC region?
Well, I think the UAE should benefit. Per capita, they've got, around 2.3 million barrels a day. Saudi Arabia, obviously, they've got huge, over 8 million barrels a day they're producing. And I think what you're finding is as prices go up, everybody is pumping at close to capacity to basically make hay while the sun shines.
We had a report out from Sure Capital this week that Qatar will this year grow by 18%, amazing number. Saudi Arabia 4%, the UAE here 3%. How much of that momentum comes from oil? What do you think?
I think a lot of the momentum is coming from oil. In Qatar's case, it's mainly gas because they've had a lot of new projects coming online. So all that new gas.
But gas and oil are always, the prices are fixed together, right?
Not really, no, not everywhere. I mean, in terms of Asia, yes, they are linked to oil. But as prices have slumped, oil is going up. The gas prices have not kept up with the high oil price. So I think there is an issue there. But you are seeing high GDP growth. And even when there was a recession, I think the IMF said that the reason why the GCC spending at that time actually helped the global economy because the spending didn't come down. At the same time, don't forget that oil exports from this part of the world are very tied to Asian economies. So a lot of the exports from here go to Asia. They don't really go to the
China.
Especially China, India. You're seeing the same. I mean, more than 60% of crude oil exports now from Saudi Arabia going to China. The US used to be the biggest market. So we're seeing a shift in trade. And obviously, as the Chinese economy continues to grow, it also has an impact on oil exports from here. So I think we're seeing a demand shift. And that demand shift is being reflected in the higher price of Brent, for example, which is more of an international marker, whereas WTI, as you mentioned, is around 90. So you've got a big gap between the two because growth in the United States is not so high. They're also they're taking more from Canada. So there's a lot of shifts in the balance of trade as well.
When the price of oil rises, it's not only a good thing for this UAE economy. If the oil retailers here in the country, it is ADNOC, ENOC, EPCO and Emirate. They buy the oil to make petroleum out of it, to fill in our tanks at the international market. So they have subsidized prices at the country's gas stations. They lose money.
Yeah.
Is that a big threat to those UAE retailers?
I think it is, and I mean, they've been bleeding money for a long time. Even when prices were at 40, they were losing money. So obviously, they're not making it. They're actually buying the refined product on the international market and selling it at a subsidized price. But the recent price hikes we've seen, I think the UAE is now the most expensive in terms of gasoline. When you fill up your car, you pay a lot more than you pay in Saudi Arabia or Kuwait. But I think all these other countries, Qatar, I think, has followed now. You're going to see a major shift because at the end of the day, we've got to consume less of what we're producing in the region because you're going to have less for export in the future. So I think we're going to see a lot of rationing, a lot of measures to try to at least economize on this massive use of refined products. Gas also is subsidized.
Do you think that petrol prices will go up in the near future here in the UAE?
I don't know. I think we've heard that there are more price increases on the way because, as you said, these people are bleeding money, and there is no other way of curbing consumption.
Tell us one more thing quickly. There are always two sides of the medal. We have rising oil prices, but also rising food prices. How does that even out for a UAE economy that it imports 85% of their food?
Well, exactly as I said, the balance of trade is affected by the weaker dollar. You're paying more for your imports, and so even if oil prices go up, people say, but the dollar is 30% lower than it was,
exactly.
So you're actually paying more. So it's not such a big bonanza. And also, don't forget that as oil prices go higher, you might see a shift in demand. People consume less, even in Asia. You will see some, subsidies. If subsidies go in places like India or China, that will also impact demand. So they've got to be really careful to sort of balance, their revenue needs with the demand from consumers.
Thank you very much, Kate. Great. Well, that's it from the business desk. You can contact us at news@city7tv.com. Up next, Laura Buckwell is back with the news.